Hi, it's Brian Decker with your Market Minute. I want to talk to you about a couple more misunderstandings about inflation and money supply and printing of money, etc. Number one, the increased money printing would lead to higher inflation and interest rates. That's a misunderstanding. There's a reason that hasn't occurred outside of the pandemic shutdown. The reason is that the government is never printing money. When the government needs to pay for obligations that exceed current revenues, the U.S. Treasury issues debt. They do not print money. That debt is sold at primary dealers who purchase it and provide capital for the government to meet its obligations. If the Treasury Department could just print money, there'd be no need to issue debt. That is why debt issuance have increased over the last 40 years. To meet the combined shortfall between government spending and incoming revenue, that's known as our federal deficit, which sadly is now at $37 trillion. The second misunderstanding about inflation and deficits is saying that the deficit would lead to inflation and higher interest rates. That's not true. The deficit is in fact deflationary. In 2023, 90% of all expenditures went to social welfare, non-productive spending, and interest on debt. Those payments required $6.1 trillion, or roughly 138% more than tax dollars collected. The problem with non-productive spending is that it has a zero negative multiplier on economic growth. Since 1985, the annual inflation rate has decreased while the federal deficit has increased. What should be noted is that inflation tends to rise when the federal deficit declines. That correlation makes sense as the deficit decreases when tax revenues increase due to more substantial economic growth rates. When economic activity slows, the federal deficit must increase to offset the decline in tax revenues to meet the required government spending. As such, increases in the deficits are directly correlated to slowing economic activity and declining inflation. Over the coming decades, the massive surge in unproductive debts will increase deflationary pressures and slower economic growth. So it's Brian Decker. Hope you have a great week.